Hong Kong, which is positioning itself as a crypto-friendly hub, setting up a regulatory regime for fiat-backed stable coins. New legislation will kick in tomorrow. Issued by private firms on public blockchains and pegged to real money, stablecoins are seen as a game changer for global payments. The territory to establish a licensing regime for stablecoins reference to the Hong Kong dollar. A new guideline issued this week lays out operational, financial and governance standards. Authorities say the first batch of licenses should be granted by early next year. Hong Kong joins a growing list of economies, including Singapore and Japan, developing regulations for stable coin integration. The Monetary Authority of Singapore introducing a regulatory framework for stable coins in 2023. Japan's regulations coming into effect that same year in June. The country's upper house last month passed the Revised Payment Services Act, or the PSA, aims to put crypto assets under a regulatory framework that applies to more traditional financial products. While the US passed a bill to create a regulatory framework, this bill, dubbed the Genius Act, now needs to clear the House of Representatives before it heads to the President's desk for final approval. Hong Kong's new ordinance has fueled investor euphoria, reportedly driving the market value of the over 20 stablecoin-related stocks up $45.7 billion since the start of this year. CNA's Mei Wong breaks down what's at stake for Hong Kong.
According to McKinsey, stablecoins currently process less than 1% of the global daily money transfer volume. But if the rate of growth seen in the last 4 years continues, the consultancy said stablecoin transactions could surpass legacy payment volumes in less than a decade. And Hong Kong is positioning itself at the forefront of that growth with the stablecoins legislation.
This is a really exciting part of the new financial infrastructure over the next 5 to 10 years. This will bring companies who want to innovate to Hong Kong because they can see that Hong Kong is a place that wants this type of new technology and is supporting it.
To provide regulatory certainty for dollar-backed stablecoins.
Stablecoins, a form of digital cash issued as tokens on a blockchain, are typically backed by cash or government bonds. Operating on blockchain networks means settlements of cross-border payments with stablecoins can be done almost instantly. Advocates said that along with other benefits such as greater stability and lower costs, stablecoins also offer real use cases.
In Hong Kong setting, is also favored by the fact that there is quite a population of expatriates, quite a population of trading companies which require international remittance. And one of the major use case or advantage of stablecoin or cryptocurrency is in terms of international payment. And it's much more efficient than the traditional payment gateway. That will be the main testing stone or initial testing stone for stablecoin in Hong Kong.
Some analysts said the development of stablecoins in Hong Kong could potentially advance China's strategic goals of yuan internationalization and bolster its national security interests.
If a Hong Kong dollar, also called CNH peg markets develops, it could actually provide an alternatives for payment settlement offshore as compared to the SWIFT. A lot of trades have been settled with that, but when it comes to geopolitical, there will be a sanction from the US on this particular route of payment, which slows things down. But with the stablecoin market being developed here in Hong Kong, it could help with the cross-border payment transactions. Volume would be kept even with the geopolitical risk.
With the new regulation in place, the market will be watching closely which institutions will be licensed to issue stable coins, with banks, internet and fintech companies seen as likely candidates. The Hong Kong government believes its open model approach will entice a variety of global institutions to want to issue stable coins here in the city. The administration says it'll also help to enhance the city's liquidity and competitiveness while building on Hong Kong's hopes to cement its reputation as a leading international digital asset hub. Mei Wong, CNA, Hong Kong.